Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 1st, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, our indicators from VantagePoint are moving into an overbought condition here. We have a known level of verified resistance that we must break through if the dollar has any hope of gaining strength, any additional strength from where it is. Now, the problem is the dollar usually tends to struggle towards the end of the first week, so we've probably got another week or so of some dollar strength, but we should be looking for a potential reversal very soon. Again, we're moving into a very overbought condition here as we approach a known level of verified resistance. Now, this should support the gold trade as we're starting to come back down into, again, a very well-defined level. We can see we've got verified support from January the 24th and further support at March the 7th. Now, again, if we look at that period when gold started to turn around, it was around the 7th. So again, towards the latter part of next week, we should see gold start to reverse. But right now, we are likely to see further downside. The first thing that I'll point out, however, is again, the RSI is in an oversold condition, but more importantly, we don't trade off of overbought and oversold. We look for the angle of the indicator to start to turn around. We can see it's flattened out and it's now starting to turn up, once again warning us of pending dollar weakness. When we look at the equity markets going into next week, this is a very easy setup, guys, if you know what you're looking for. Our verified level is I'm going to call it from now on the Fed bar, which is 2864. We have very strong support sitting down here at or about the 2780, 2790 area. We can see we're bouncing off of that, but once again, guys, remember, we have had multiple failures off of this November high here. That high coming in around the 2834 level. It's more particular this bar right here, 2833. We're approaching that level yet again, but my optimism on a significant stock rally remains heavily guarded. Now, if stocks do turn lower, that is obviously going to take, we're going to see oil move lower. Now, oil verified resistance, this is the fourth failure we've had at this 60.39 level, guys. You can see that the VantagePoint identified the resistance point going back here to March the 21st. We came back up to almost the exact same level, 60.38, and failed. And then we've had two other failures since there. So basically, very difficult level around this here 60.73 area. We must break free and clear of again 60.38 and close above that particular level for at least 2 days in a row. But if the S&P 500 can rally higher, then oil is likely to follow. But once again, demand is rather low and supply is still quite high. When we look at the euro next week, guys, we're going into a known area of verified support here, that area 111.76. Probably one more push to the downside, then we could see a reversal. Once again, we're moving into an oversold condition. I would look for the euro potentially to again reverse higher by the latter part of this coming week. We're looking for the indicators from VantagePoint to confirm that, starting with the neural index. But once our medium term crosses our long predicted difference, we should see the euro again move higher. Now, I know this situation, the doom and gloom in the Europe, is hitting the currency, but things are not that much better in the US. If we're talking debt, GDP to debt ratios, they're very similar here, guys. So when we look at the euro versus the US dollar, we're basically looking at the window into the glue factory here. So it really is a case of the prettiest horse in the glue factory when we're talking about these two currencies. So again, supply and demand, there is demand for euros usually in the middle of the month or the end of the first week of the new month. So watch for potential pending strength there. Now, if the equity markets can turn around, break through 28.64, my optimism on that is very guarded at this time. US Swiss franc could break higher. Right now, we must break through this resistance at 99.73. We're closing out the week at 99.49. So once again, the indicators from VantagePoint are a little bit mixed. We're at 46.4 on the RSI. We're looking for this thing to break through that level. For our immediate breaking point here, however, we have good support here at 99.48, and we're closing right on that level. So if we can use this as a springboard, if equity markets recover and move higher, US Swiss franc will follow. Pound dollar still being affected here by Brexit, but again, we're coming into an area of known verified support that goes all the way down to this low at 127.73, but I anticipate we've got significant support coming in at the 129.55 area, closing out the week again 131.48. So I would still look at a potential long at this particular area with all stops below again 127.73. But as we move into these verified zone, we're looking for the signal from VantagePoint to tell us that this is getting ready to reverse. And again, I think that will be towards the latter part of the week. Moving into the dollar yen this week, another busy week, we can see that dollar yen basically follows the US Swiss franc, almost the same trade here, guys. So we're recovering here. Once again, we go back, click on our F8. We're watching this pivot area at 110.68. We're closing 110.83. So again, if stocks can recover, this pair will start moving higher back to our identifiable verified zone here, and that's coming in right now around 111.69. Stocks stay firm, they move higher. US Japan, US Swiss franc, they both extend higher. Now, once again, with US CAD, we can see it's made a big push. This could be a leading indicator, guys, that oil is getting ready to go higher. Stocks are getting ready to go higher. If that happens, then the US CAD will go lower. For starting off Monday's trade here, we can see that we've got good resistance at the 134, 133, 133.92 level to be specific. That matches our VantagePoint predicted high of the day. I would hold out for that area, but we've got a clear sell signal on here. The RSI starting to accelerate. Predicted MACD down, and again our medium term crossing our long predicted difference with the first day the neural index is down. So the likelihood that this is going lower very high, but I would wait for a retest of 133.90 before I got too aggressive with that. As for Aussie US and New Zealand US, once again, if stocks can turn around, that may actually really help a reversal. We can see the with the RSI on the Aussie US is bouncing off the 40 level. We are not breaking out to the downside here, guys. We're in a very tight channel that's very easy to identify. The high point there was 71.47 and the low point coming in at 70.65. 70.65 is our support level. We've had multiple tests of this area down here. So once again, it does point towards a break higher. If Aussie US breaks higher with the stocks, then New Zealand is likely to follow. And we can also see very good support down here with a double bottom coming in at 67.74. Indicators are slowly starting to turn positive on this pair here too. So once again here, guys, let Monday pass. Tuesday is where we focus our price. But most things are pointing towards one more push in the dollar, and then it's likely to sell off like it does, which basically what is done almost every single month in 2019. So we want to be sure we're following these monthly cycles on the dollar. Usually the dollar, again, sells off towards the middle of the month, and it's strong at the beginning of the month. But we did start a little bit early this month. The dollar strengthening around March the 20th. So I believe that the rally in the dollar is just about done here. So with that said, this is the Forex Weekly Outlook for the week of April the 1st, 2019.